Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. How you doing out there? Hope all is good with you, and you're having a good week's hump day there for you. It's good, right? Yeah. Hope all is good there. We are financial advisors here at Jazz Wealth, and hope you'll check us out at jazzwealth.com. Got a song for you. Robert Randolph and the Family Band. I Need More Love. Right there. Want to wake up, get yourself feeling funky for the day? That's the song.
Are you bringing back Jazz Artist of the Week?
That's not a jazz song.
Okay.
He's actually a guy that plays the slide guitar with his finger. I don't know what you call that. Yeah. He sits there and plays like it's an electric guitar. But that song, the bass part, man, that bass is thumping, man. I just love the way that goes. And it's not an old song either, so feel free to have a listen. You'll love it.
Okay.
It just gets you going, man. It's a happy song. Anyways, we talk about the stock market here, not happy songs. I just like to point that out to you, expand your mind just a little bit there. I do appreciate all of you who have joined us here at Jazz Wealth. We are the small fish in a rather large pond, and actually I'm a tiny bit nervous. So we were invited to a conference where all these big people are, Goldman Sachs and the other guy, BlackRock and all this, and then we got invited to cocktail hour sort of thing, me and Eric. And you don't want to get Eric around the cocktails. But so we got invited to that, and it's in the penthouse of the Diplomat Hotel down south. And I'm like, oh, well, okay. What do I do? Are they gonna let me in with the shirt? You know I'm going in the shirt. But yeah, we'll see how it goes. That's in a couple weeks. But let's talk about the stock market here because inflation numbers came out. And so that's a good thing. Remember that the Fed is in hyper data dependent mode. They said we will look at all the data. They're no longer looking just at inflation. And I think that's probably why you see people wondering like, oh, okay, maybe the market's not going to do too much here. If it were a super high reading then you would think, okay, maybe one more rate hike. We come in at 4.9%, the headline CPI number there. That means we've seen a drop of 4% in inflation in the last 10 months. Now remember, inflation going down does not mean prices are going down. That's a big disconnect there. Inflation going down means they're just not going up as fast. So prices are only going up 4.9% year over year now, whereas they were going up 9% year over year. So the rate of the increase in the prices has changed. A lot of people get that confused and they think, well, I don't see lower prices. Nope, just inflation. That one is one that you got to think about there because I sort of fell into the same thing because I was thinking 4.9%, I don't see it. Like I see the airfares down, I get that, but I don't see prices. No, my little head went that way for a second. I go, no, remember, it means that the rate of change of prices has slowed down. Unfortunately, those of you that say, well, when inflation comes back down, then, I'll go buy a house. You may get a pullback in the price of houses, but it doesn't quite work that way. So don't let the news scare you or intimidate you or cause you to look a different way. Now remember, about 80% of CPI or inflation is core. So I shared this with you guys yesterday that we got 79.6% is core inflation there. And this was, I'm gonna go like this, that was largely driven by used car prices. So what's actually funny is about 1/3 of the increase month over month in core inflation, about 1/3 of that was due to used car prices, right? Just like we talked about yesterday. Also, airfare came in a little bit weaker than expected. We talked about this yesterday. Goldman Sachs has their own team that follows the price of airfares, like literally second by second. They said airfares will be down 2%. The team did anyways. It came in down 2.6%. So that helped drag a little bit on inflation or core inflation there. But this, along with shelter prices inside of what you see right there, is what caused that inflation number to be just, a little bit lower than expected. Because of that, by the way, we now have, I'm sorry that it got a little out of hand there. Because of that, we now have the expectation of a pause in rates. How do we come to that? We'll take a look over here. I didn't change the title, so we'll just get rid of that. but this is the actual, they call it the Fed rate tool. You can look at it on the CBOE, but we are now 99% chance of a pause. And what this is showing you, by the way, is right here, the current target rate is between 5 and 5.25. So there's a 99% chance that it stays at 5 and 5.25. There's a 0.4% chance that it goes up a quarter point to a range of 5.25 and 5.50. So I had some questions on that last time where people were like, dude, what I see like a chart with data, but I'm not entirely sure what I'm supposed to be looking at here. So now you know how that works. Okay, going over to the markets here, S&P. So far year to date, S&P, what do we got here? About 7.55% on the S&P, hovering near those highs. We know we're sitting back waiting for that. However, over the last 3 months, if you were to look at, let's just say you invested for only the last 3 months, you'd be up a whopping 1%. Essentially showing you not much has happened over the last 3 months. A little bit of a range, and a sleep, right? So we've got a little work to do there. Remember that nothing exciting happens, I'm gonna keep saying it that way, until we get above this line or below this line. As elementary as that sounds, that is exactly what's going on in the markets. I do want to point out that the Russell 2000, congratulations, back positive year to date, only by 0.4%. But this one, if you were to look over the last 3 months, you would hate the fact that you were invested in the Russell. The Russell started off the year with the big rally, and at one point was leading the way, and then fell apart. So over the last 3 months, you're down almost 8% in the Russell there. Small cap growth was what led the way here today in the Russell, so not a bad day as far as performance goes. It was in second place, but nonetheless, it is basically flat year to date, so you wouldn't be too happy if you're a small cap investor. You'd be happy if you're in the NASDAQ. Anything NASDAQ driven is just killing it so far this year. The NASDAQ up 22% year to date, and it's the only market with any real action over the last 3 months. You have about an 8% rally here over the last 3 months. So that big cap, we call it super duper cap tech stock, Microsoft and things like that, all doing well. Some of the rallies in semiconductors, of course, looking over there, a little bit of that action. But other than that, that's kind of where it stands, at least over the last 3 months. The Dow also, there you go. This one's easier to see, but the Dow flat over the last 3 months. And if you look year to date, essentially the same thing. It's only up 1% year to date. Now, I'll give it this. It was down quite a bit to start the day and actually recovered more than half of it there. Looking elsewhere, not really much here to report. Small downtick in crude oil, small downtick in gold. Once we got the inflation numbers, we saw bond prices take off. Bond prices meaning lower yields. So the perception of, oh, maybe the Fed is getting this right. That's essentially all that was today. And pretty much all I got there for you. If you want to play Guess the Dow, jazzwealth.com/Guess the Dow, and I will give you $100 if you're the closest without going over. No strings attached, no games being played. And in just a second, we're going to look deeper into Wynn's earnings. I've got every ounce of data down to the actual take rate of slot machines, blackjack, and all that. Fascinating. I was like hours. I was just tearing this stuff up. I found that so fascinating, so I'll share that with you here momentarily. Let's go over to other stocks in the news. Come on now. There you go. By the way, what other advisor is here daily that will take your questions about the stock market and actually has the confidence to come and help and answer? Not to toot our own horns here, but I keep talking to more and more advisors. I'm like, what are you doing today? And they're like, well, I'm traveling. What are you traveling for? What, you're not working? Blows me away. Taiwan Semiconductors. So they were in the news today. Sales are not going so well for them, and that's not good. That's not good for a number of reasons. Politically, you know what's going on between, potentially going on between China and Taiwan. It's also not good for a lot of the end distributors. Apple, for example, using their chips. So not the best of news there. Sales down down a total of 14% year over year. And I made the comments that it's not done yet. So a little bit of a difference between what they said last quarter. Airbnb. So one of the big movers here today, down 10%, Airbnb, better than expected earnings. Guidance was kind of the same. They just hinted at a slowdown. So when you look at their gross bookings, that's how we measure Airbnb. Like, how many gross bookings did you have? Was it more or was it less? Are you growing or are you declining? Like Netflix with their subscribers. That's what we want to look for here. And then the amount per rentable night, of course, is interesting as well. But they hinted at a slowdown there, and they said it's not in North America. North America Airbnb is strong, but all the others are a little bit weak, and it's getting weaker there. So much so, now you think like, well, maybe they're just saying that. You know, maybe they're projecting that they may see weakness. Well, they're pretty confident in that, because if you look further down their earnings report, they took their marketing dollars that they were going to span out for the rest of the year. They went and grabbed those marketing dollars for later in the year. They're going to spend them now. So they're trying to get ahead of that. And that's probably why you saw a little weakness there anytime you bring those marketing dollars forward. H&R Block, there you go. Sales. Right, competition is pretty stiff in this industry here with TurboTax and others, which would be Intuit. H&R Block, sales declining there. Overall earnings a little bit lower than expected. So much so, I didn't even go look at it to see anything even deeper than that. They just basically missed their earnings. Wynn Resorts, I would have expected a little more out of these. Wynn Resorts, I'm going to talk about this for a second. These are some smart people. The more I read about this, I'm like, God, I am not thinking about business in the same way that these guys are. They realized at the end of February that the group tour visas for Macau, overseas, would be coming back online, meaning you could get those group tour visas and you could come and gamble, and there could be busloads of people coming to gamble over there. And they realized that, so they spent tons of money and effort on marketing to the mass market group tour people. Come on over, come do some gambling, let's come on over here. It was crazy. Now the mass market money came. It worked. They spent that mass money. Wynn Resorts went after those people, realizing those visas were going to come back online, and it worked there. Hotel occupancy, 90.1%, so they're killing it there. Very, very cool. And I want to take a look at some of these numbers. We can look at, and we'll do this here in a second, we can look at the table win rate for VIPs. We can look at the slot machine win rates. We can actually see how they performed each individual category of their business and compare that to the previous quarters. So let's dive into this. First, I'll give you the boring numbers, then I'll give you the exciting numbers. So I was so excited, I didn't even bother to change it here. So we got this button right here. Okay, walk with me for a second. All right. So in right here, right in the center, try to highlight this. That doesn't come up very well. But this is the current quarter, and now we're looking backwards, previous quarters, and we're looking forward for projections as far as, what the next quarters may be. So we have their VIP category, and then we have their mass category and slot category. Mass category is slot machines, blackjack tables, anything out on the floor that doesn't require VIP access there. And so we've got, and rolling chip volume, by the way, is like, this is kind of new over here. I don't think it's done much in the States, but over in Asia, somebody came up with this concept of saying, hey, what if we get VIP people, if they're going to bet, let's say they have $500,000 and they want to gamble, what if we could get them to make 100,000 of it non-refundable? Or they call it non-negotiable or something like that. Meaning you have chips that you have to spend. They are not worth anything once you get them. The other 400,000 may be cash. And so then if you win off the $100,000, win, get it? So if you win, then only at that point can you cash those chips in for real chips that are worth something. So that's the non-negotiable side of things. Anyways, so we have both the change in millions and we have the percentage change here as well. So slot machines, $3.5 million, up 207%. Look at the money coming back. People coming back and gambling in the masses. Their VIPs come back, spend big money. Rolling chip volume is actually pretty good there. People willing to do that and sit there and gamble there. Very, very cool. We're also breaking it down by the different two locations there. Now, I want to go into the fun stuff. I don't want to wait anymore. Let's get rid of this. This doesn't really add up to anything anymore. Take a look at this. This is so cool. So VIP table win rate. They had a 2.72% win rate. The casino, not the player. So that means for when you sit down as a VIP you have essentially a 97% chance of winning. That seems pretty good, right? If you're clever enough, a little money management there, maybe you could do it. Where was the slot machines? Slot machine win rate, 4.7%. Now, I had to do some research on this one. This is historically really, really low. It's closer to 10% over here in the States, under 10%, but still it's closer to 10%. 4% win rate. That means you essentially are not going to win on that one there. Slot wins, total number, and then net win per day. Oh, that's what I want to show. There you go. So we've got mass net win per table per day, playing blackjack there, $12 million. I'm sorry, $12,000 there, 207%. You kidding me? Oh my God, it's so cool to take a look at that, right? And so we have, where was it? Gaming revenue, percentage of revenue for any of the mass gambling or slots there, 82%. You're not going to win. Like there obviously is a small odds chance that someone's going to win. They are running like such an efficient thing here. I guarantee somebody's looking at that slot win rate and saying, what happened? Did we have some jackpots pay out or something? What's going on there? Why is that number a little bit off? But how cool that you can dig in and see, oh, by the way, let's go over here. VIP tables, their total win. Now, granted, they didn't have VIPs there. It was hard to get people over there in the last quarter of the year last year. 5,300% return. Oh my God. Do you see any single digits here? I mean, just to give you a picture of that you can look at and see, yeah, people are gambling. The Asians, they like their gambling, by the way, but they're going and they're gambling. And these guys are soaking up their dollars. I think that's just fascinating, man. Anyways, thought we'd spend a little time on that. Did you find that exciting? I was just eating that stuff up. Lastly, we got to talk about Upstart. Do you know what Upstart does, Cody? What do they do? What does Upstart do?
I went to go read about it, and I totally forgot just because I can't get that guy out of my head.
See, that's an honest answer.
Yeah.
Hey, how about you just say, I don't know. I don't know. You know what I mean? Oh my God, that was still, I get all worked up and cringed when I see that.
We're just going to keep posting that video on our socials anytime until Upstart doesn't exist. We're just going to keep posting.
He can't live that down, man.
Oh.
And the fact that when he did it, though, what drives it away is he goes, what? And then when he's like, I'm sorry, I can't hear you. And he goes, no, oh, I'm sorry, I was saying this. And he goes, nope, still don't hear that. Like the way he did it. I mean, what's wrong with just saying, oh, I don't know what they do, actually. I'm a stock guy. I just like looking at the stock. Anyways, got a big pop today. So part of the reason is now they're using more advanced AI to do this. So it's a lending platform, but they do it in a way where they go to a bank and they say, if you would like to participate, we'll let you take a part of these loans. We'll go get the loans, you will fund the loans, and we'll let you participate in the success of them. We'll qualify the buyer and all of that. So they're going to use AI to make that more of a, hopefully less risk on their part, but to make that product, the end loan or the person that's going to get the loan, to make that worth more to sell to the bank, essentially is what they're doing. So that was good news for them. They unfortunately still don't make a lot of money. And but they did get some money of people that want to fund these loans. It's just it's a tough business. They're not quite that profitable just yet. All right. Anyways, yeah, let's do this. Let's go over here and come on over here. We'll see if we can answer some questions and then get out of your way. Yeah. He says, I always say you're better off dropping your cash off the front desk and walking out of the casino. I mean, if you think of it as entertainment, you want to have some fun. I've actually never played, I don't think, have I ever been to a casino? Probably on a cruise ship or something.
You've never been to the Hard Rock?
I've been through the Hard Rock. Yeah, I had one time we walked in with Haley, but she wasn't 18. So I was like, just act like you're 18. And she was like, I can do it.
Jeez.
But I don't recall playing anything because we were in and out. But I've never played blackjack, and I think that's a game I would like to play.
Supposedly that's the one you actually have a chance at, right?
You want to know the odds?
No, I don't.
Oh,
I didn't like the numbers.
Oh no, that is one you have a pretty good chance. I think the casino, the win had like a 1.2% win rate or something on blackjack itself. So yeah, but yeah, you're gonna have some fun with it. Don't just drop your money off and run away. Feel like you have a chance. Short-term thoughts. Microsoft 2 months have a lot and you're using some for moving expenses, I think Nicholas is saying, can I sell some of it and use the money for moving expenses? I can't tell you to sell a stock legally. I can only give specific advice to clients. However, if you're needing the money for moving expenses, at least you're selling into a position of strength, right? It's much better to be someone selling on the way up going, whoa, what great timing. I need some money. I'll sell some Microsoft. I'll be on my way. Than to be in something like Upstart and going, darn it, I really want this to recover, but I need the money. So I'll give you that. If it were me, I'd be like, oh, cool. This works out great. Yeah. 97% chance of losing as a VIP. Yep. That's essentially where that's at. Now, remember, so stats will kill you sometimes. So 97% chance of winning as a VIP, but you don't bet the same fixed amount. So there's two things to look at, your win rate and your win-loss ratio. Right? It's the same thing in stock trading. You don't have to be right more than 50% of the time if you're a day trader or short-term trader or whatever, as long as your win-loss ratio is wider. Right? If it's a 1-for-1 win-loss ratio and you're right 50% of the time, assuming there's no commissions or anything, you're a break-even trader. Right? You get that so far? If you only get 40% of them right, but you win 2 times what you lose, yeah, you're profitable. You're a winner, right? Because let's say, you get that? Are you looking at me funny? Yeah, good. So if 4 out of 10 times you win 2, right? That's 8. If 6 out of 10 times you lose 1, that's 6. So you won 8, you gave back 6, you made 2, but you only got 40% of them right. So you can stretch that number even further and say, what if I won 3 times what I risked? So in other words, I won 3 for every time I lost 1. You can do that. You just have to be good enough to lose the 1. That's the trick. If you lose whatever 1 is to you, you get out. A lot of people can't do that. You know what I mean? Sometimes it gets a little tricky. It's like baseball. Yeah, you can essentially have that. Yeah, that's a great analogy, actually. Yeah. Perfecto. All right. Did we do you good today? Did you learn a little bit? Well, if not, come back tomorrow. I'll try to do it all over again. We like to teach, as hopefully evidenced by our daily free show. And we'll come back and do that again tomorrow. You guys enjoy the rest of your evening, and we'll see you then. Adios. Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.